OpenAI just filed to go public. SpaceX listed on NASDAQ last week. Anthropic is next in line. We are living through the biggest AI IPO wave in history, and most investors are going to wait until listing day, buy at the peak, and wonder why their returns are mediocre. The people who make real money on IPOs aren't buying on day one. They're buying months before the company ever hits a public exchange. In this video, I'm breaking down exactly what's happening, who these companies are, and, most importantly, how ordinary investors can actually get in before the crowd. Let's be clear about what's happening right now. In the span of 2 weeks in June 2026, two of the most valuable private companies in the world moved toward public markets. OpenAI filed a confidential S-1 with the SEC on June 8th. SpaceX listed on NASDAQ on June 12th under the ticker SPCX at $135 per share, and Anthropic, the company behind Claude, filed its own draft S-1 registration on June 1st, with a current valuation approaching $965 billion. These aren't speculative startups. These are companies generating billions in revenue with real products, real users, and real institutional backing. And they are all going public within roughly the same window. The question isn't whether to pay attention to this. The question is, how do you actually participate? Part 1. The 3 AI companies you need to know. OpenAI filed a confidential S-1 with the SEC on June 8, 2026. Goldman Sachs and Morgan Stanley are managing the offering. The company was last valued at $852 billion in a March 2026 funding round, with analysts targeting a public valuation of $1 trillion or more. Revenue, approximately $25 billion annualized. That's over $2 billion per month. Expected listing window, September to Q4 2026. SpaceX, already public. Ticker, SPCX on NASDAQ. Listed June 12, 2026 at $135 per share. If you missed the pre-IPO window on SpaceX, you can still buy SPCX today as a newly listed stock, but the earliest investors got in at a fraction of that price. Anthropic filed a draft S-1 on June 1, 2026, valued at approximately $965 billion after a recent funding round. No listing date set yet. Public S-1 expected sometime this summer. Still private. The pre-IPO window is still open. SpaceX shows you exactly what the opportunity looks like. OpenAI and Anthropic are where the next window is right now. Part 2. Pre-IPO versus IPO. Here's why this matters for your portfolio. By the time a company like OpenAI lists on a public exchange, institutional investors, hedge funds, venture capital firms, sovereign wealth funds have already been holding shares for years. The valuation at IPO reflects their cost basis, not yours. The retail investor buying on listing day is paying the price that reflects all of that early growth already baked in. The upside from that point is real, but it's a fraction of what was available earlier. Pre-IPO access, buying shares before the company goes public, is how you position yourself closer to where institutions have been sitting for years. It comes with serious risks, which I'll cover. But the opportunity is real. Part 3. The catch, accredited investor status. Here's the part most YouTube videos skip. Pre-IPO investing is restricted to accredited investors under SEC rules. That means you need to meet one of 2 criteria: a net worth over $1 million, excluding your primary residence, or income over $200,000 per year as an individual, or $300,000 combined with a spouse for the last 2 years. This exists because the SEC considers pre-IPO investments high risk. These are illiquid assets. There's no guarantee of an IPO. And if a company never lists, your shares may be very difficult to sell. If you don't currently meet the accredited investor threshold, that's okay. This video still matters because understanding this space is part of being a serious investor. The platforms I'm about to cover are also useful when you get there. If you do qualify, here's how to actually access these opportunities. Part 4. EquityZen, the lowest barrier. Entry point. EquityZen is one of the most accessible pre-IPO platforms available to accredited investors. After being acquired by Morgan Stanley and reducing its minimums in early 2026, EquityZen now offers some SPV fund structures starting at $5,000 to $10,000, significantly lower than most institutional alternatives. Here's how it works. EquityZen buys shares from existing shareholders, employees, or early investors who want liquidity before the IPO. It pools those shares into a fund, and accredited investors can buy into that fund at the stated minimum. The downside: you're not owning the underlying shares directly. You own a fund that owns shares, and the company itself has a right of first refusal, meaning they can block the sale if they choose to. This is a real risk, particularly with OpenAI and Anthropic, which have tight controls over who owns their equity. Despite that, EquityZen remains the most practical starting point for individual accredited investors who want pre-IPO exposure without a six-figure minimum. Part 5. Forge Global. Forge Global is the other major player in this space. The minimum investment on Forge is typically $100,000, putting it in a different bracket entirely. The advantage: Forge gives you more direct access to secondary market shares and has deeper deal flow. For high-net-worth investors who are already experienced in alternative assets, Forge is the more powerful tool. But for most individual investors exploring this space for the first time, EquityZen's lower minimums make it the more accessible entry point. The trade-off is higher fees and less direct share ownership. There's also a third option worth knowing: Heave, a newer entrant that's been growing in this space and offers competitive pricing on secondary transactions. Part 6. The risks you cannot ignore. I want to be direct about the downside here because a lot of pre-IPO content skips this. Risk 1. Illiquidity. Pre-IPO shares cannot be sold on a public exchange. If you need the money back in 6 months, this is the wrong investment. You are locked in until the IPO, a secondary transaction, or indefinitely if neither happens. Risk 2. No guaranteed IPO. OpenAI has filed. That doesn't guarantee they list. Market conditions, regulatory issues, or internal decisions could delay or cancel the offering. This has happened before. Risk 3. Right of first refusal. The company can block your sale. OpenAI in particular has been known to exercise ROFR aggressively. You need to understand that your exit depends partly on the company's cooperation. Risk 4. Valuation at purchase. You're paying a premium over the most recent funding round, not ground floor pricing. At $852 billion, OpenAI needs to grow significantly to make your pre-IPO investment outperform simply buying the stock on listing day. This is high risk, high potential reward. Go in with that mindset or don't go in at all. Part 7. What to do right now. Here's a practical action plan based on where each company stands today. SpaceX. The pre-IPO window is closed. SPCX is now trading on NASDAQ. If you believe in SpaceX long-term, you can buy the stock today like any other equity. It's a new listing, so expect volatility. OpenAI. The window is still technically open through secondary platforms. Search EquityZen and Hy-Vee for current availability. Supply is limited and prices move fast. If you're an accredited investor and you want exposure before the September listing, this is the time to look. Anthropic. Still fully private, pre-IPO, with a summer 2026 S1 expected. Of the three, this may offer the longest remaining pre-IPO window. Monitor EquityZen and Forge for share availability. And if you're not yet an accredited investor, track these listings anyway. The public IPOs of OpenAI and Anthropic will be some of the most significant market events of 2026. Understanding what you're buying on day one puts you ahead of 90% of retail investors who buy on hype alone. Here's the fast version. OpenAI filed for IPO June 8, 2026. 8.52B valuation, 1T target, expected CPT Q4 listing. SpaceX just went public. June 12th, buy SPCX now or you missed pre-IPO. Anthropic filed draft S1. June 1st, still private. Pre-IPO window still open. Pre-IPO access requires accredited investor status. EquityZen. 5K 10K minimum, lowest barrier. Forge. Global 100K minimum, more direct. Real risks, illiquidity, no guaranteed IPO. ROFR, already high valuations. Best move right now. Check EquityZen for OpenAI and Anthropic availability if you qualify. If you found this useful, subscribe. Every week on this channel, we break down real strategies for building passive income using AI tools and smart investing. No hype, no guesswork. Next week, the top AI money tools in 2026. From automating your content to running investing research, we're covering the tools that are actually worth your time and money. See you next week.